Welcome to the Phoenix Blue Morning Update on Friday the 24th of March. I'm Tom Colley presenting today. We've had a relatively quiet week this week. We come to Friday and we actually had a little bit of interesting news overnight and also something to be wary of later in the day. Let's start by looking at yesterday's news events and data we've already seen. Yesterday morning we saw a really big month-on-month retail sales against a forecast of 0.4. We had an actual of 1.4. That's a really big jump. When we go to the pound chart, we will see, however, that the pound struggled all day to break the 125 level and subsequently closed below and is trading below today. This could be partially because of the month-on-month figures. If you look at the figures from last month, from January, they were really disappointing. So potentially traders looking at the longer-term quarterly picture and realising that the net result isn't yet very strong. The other things we had out were unemployment claims from the US. Slightly disappointing, but not a huge effect on the markets. This is a weekly number. It's not like monthly non-farm payroll, so we don't see big moves on that. We might see something if we saw a really big difference. We also had Fed Chair Yellen and at least two other FOMC members speaking yesterday. However, they were speaking at a specific conference that didn't relate to the general economy, so nothing came out of that. What do we have ahead today? We have the Canadian dollar CPI out at 12:30 along with core durable goods orders month on month for the US. So again, another quiet day. But I did mention we'd had something happen overnight. The Bank of Japan Governor Kuroda was speaking at a Reuters event. He said a lot of things, but the key phrases to quickly get across the message was he saw no reason to reduce monetary accommodation at this time, and also said now is the time to make the most of the favourable global economic conditions. What he's basically saying is Japan needs to take advantage of rising rates in the US, a strengthening dollar in order to drive its inflation, which has been its huge long-term bugbear for decades now. It's still targeting 2% inflation. Kuroda's previously said that they won't reduce monetary accommodation or their yield curve control until that 2% inflation target, which is a much higher target relatively for Japan than elsewhere. We did see this play into the markets overnight. We saw a weakening of the yen in respect to those comments. One other thing that's worth mentioning, we're waiting for the American Congress to vote on Trump's amendments to what's called Obamacare. That's US healthcare. Let's call it free of charge healthcare, what we would call in the UK something similar to the National Health Service. We were expecting a vote on this legislation yesterday. That was deferred, and it now looks that that legislation vote will be something in the region of 6 to 8 UK time this evening, just as the markets close. Why is this significant? Well, in itself, it isn't hugely significant to global markets. However, it's the first real test of Trump's ability to get legislation through the US legislative system, particularly in areas where he doesn't have outright control. So if he fails to get this through, then it could put into question his ability to put into place other fiscal measures in terms of infrastructure, reducing taxation and things that are due further down the line. If he can't get it through the legislative system, then that would put in doubt his ability to do it, and an inability to do it would certainly potentially work against what's called the Trump trade, which has been bullish stock markets since his election back in November. Okay, over to the charts themselves. Well, I'm watching a couple of key areas on here. This lower level at 99.20 is really key for me. I see that as a potential area of yes or no in terms of dollar strength. If we get a break and close below that, dollar strength is off the picture or off the page for the medium term. We have this head and shoulders formation we've been talking about for ages. This would play off around potentially targeting these levels around the low of the election spike there. Price pushed up to 99.70, 99.80, where we're seeing resistance at this moment in time. Again, a key level. Key because I see that as potentially a pullback before we come down to this level, and the question is answered in itself. I've said before, this is something that I'll be looking to correlate with other markets, particularly the Euro and the Swissy, as and when it gets down to there. Our view being that we will see the dollar bounce at that level. In the meantime, whilst we're having this small range-bound movement in here, we are seeing some realignment of currencies relative to the dollar. The main one of those being the yen. We've had a bearish US dollar JPY chart for the last couple of weeks. We spiked back into this support level here through these lows here at about 111.50 overnight, based on those comments from Bank Governor Kuroda. But we do see potential for further downside in this market. We've got a key level here around the 109.50, 109.40. Would also be the bottom of this trend here. And we could see the yen strengthen before it weakens as dollar strength comes back in. So that would be effectively some form of realignment between the yen and the dollar prior to the dollar strength kicking back in. Over on the euro, well, we're short the euro. We've been short since this level about 108.25 a few days ago. We've had money off the table, profits locked in. We are looking for further downside. This 0.715 level here could be a target for this trade potentially. We may see another pullback, and you'll see I've got an order in here on this particular account back at the 8.25 level. If we pull back there, I'll be looking for a trade short at that point. Over on the pound, we talked earlier about the retail sales news coming in yesterday. Here's 125. I think I incorrectly stated it didn't close above. It fought to get above 125 immediately after that data. As the dollar weakened, it did close above. But as we saw some dollar strength coming back in on the back of the Bank of Japan Kuroda's comment, we're again back down below this 125 level, suggesting that there isn't a lot of strength in the pound at this moment in time. Another market we're short on at the moment is the Aussie. Short through this level at the top here, about 7.50. Again, money off the table, profits locked in. The rest of the trade is free of risk. Clear target for us this time at the bottom of this channel. You'll see I've got another trade in there. I'm actually looking for price to come down to that level, and then we'll look for a reaction simply to take an intraday trade and bank 25 pips below before the close today. Over on gold, well, gold's clearly testing this very significant level through here at the moment. We are watching this in correlation with the stock exchanges. This market will be sensitive to the Trump healthcare vote later today. We potentially see a pullback in the stock markets where we are at the moment, awaiting at a point of indecision, awaiting the result. If Trump wins, I'm sure we're going to see a bounce to the upside in stocks, which will correlate with a move to the downside in gold as we go back to a more risk-on scenario. So watching this level at this moment in time to see what precisely happens. If Trump loses, there's an obvious trade, which is a break above these highs, close above these highs, and pull back into this level here to take it back to the long side through to this downward trend line next week. I mentioned the US stocks. This is the S&P 500. Sorry, I clicked that too soon. We're running through that channel, or up that channel at this moment in time. We've had a two-leg pullback within the channel, which could be considered a bullish flag. But we can see certainly yesterday and the day before here, significant indecision. Again, so far today, we've got what looks like it would close as an indecisive candle if it closed today. So we will be watching that. However, as I said at when I mentioned it at the open, we are looking for this data to come through between 6 and 8 this evening, right as the market closes. So we won't be looking to take advantage of that this week. We are wary of that, and we will be looking to have any orders, certainly as we would normally, closed over the weekend. And we'll be considering any open trades in the light of where they are mid to late afternoon before this event happens. We could see, because of the timing, unusual movements or gaps on the open on Sunday night. So caution there. Okay, guys, that's it for this week. We're still waiting to confirm the actual date for the next free trading session. It will be usually the third week of the month in London. If you are interested in that event, simply go to the website. There'll be a link coming up on this page shortly, and go to the contacts page and just register your interests. We'll then send you the details as soon as they're available. If you're new to these videos, you can subscribe by clicking the other link that will appear here. Other than that, just to say, have a good day's trading, have a great weekend, and we'll be back with you on Monday. Thank you and goodbye.